Ladies and gentlemen, esteemed participants and distinguished guests, it is with great pleasure and honor that I present to you today a true visionary and a leading expert in the field of taxation and finance, CA Bimal Jain ji. CA Bimal Jain ji needs no introduction, but still, I love doing it for every webinar and I will continue to do so. He's a renowned chartered accountant and a member of ICAI since 1994, with an exceptional reputation for his expertise in tax laws, compliance, and financial strategies. With an illustrious career spanning over 21 plus years, he has been a driving force in shaping and influencing India's taxation landscape. His vast knowledge and profound insights into the ever evolving tax regulations have made him a sought after authority in this industry. This is not the end when we are talking about CA Bimal Jainji. He also has a bachelor's degree in law and a qualified SAP financial control consultant. On top of that, he's having 18 years of working experience in companies like LG, Honda, Hindustan Development Corp, Python and Company, and now the director of A to Z Corp. The legendary Bimal Jainji is having hands-on experience in providing opinion and advisory services, carrying diagnostic of business operations review, structuring of business model, undertaking litigation services at all appropriate forums. He has also been a keynote speaker at Guinness World Records made by ICSI in the largest taxation mission on GST, which was graced by 4,500 participants, breaking record of Japan. I mean, as a true nationalist that we all are, it gives us immense proud to believe that Sir has defeated a software developed country like Japan. It's truly a great achievement to have, Sir. I mean, we feel very proud that Zoho Books and Zoho Finance has been able to associate with you. He has won numerous awards from Amity School Noida, Best Speaker Award from NIRC, ICAI, ICWI Young Achievement Award at Igniting Minds 2015, and also Best Participating Award in NSOP 117th batch by the ICSI. A true visionary, a true legendary when it comes to this particular topic. Without further ado, I would like to warmly welcome CA Bimal Jain ji, a true luminary in the field of taxation, and let us all gain from his vast reservoir of knowledge and experience. Thank you so much. And over, guys, it's over to you, Bimal Jain, sir.
At the outset, let me thank Hers for lovely introduction and good afternoon to all the participants who are taking out time and joining this important webinar on our preparation of GSTR 9 and 9C for financial year 22-23. Hope I'm audible and visible to all my participants. If I'm audible and visible, I will request you can write yes in question answers tab, not in chat box. Here we are into question answers tab. So you can write yes so that we can start immediately. And for any interaction, you would be using this question answers tab here. That is the platform available here. Okay. So without taking much time, what I want each one of you to do today, have a piece of paper and pen ready. Have a piece of paper and pen ready. And I'm going to deliberate on in detailed manner, but I want you to take down the important pointers. If you take down those pointers and create your handmade note, I'm damn sure you will get quick grasp of the content which we are going to discuss for 9 and 9C today. And of course, at the end, I'm going to give you my mobile number also, so that you can forward your handmade note on my mobile number. Let me see who is the best participants today, who is making good note of my deliberation today. So I would be looking forward from each one of you. But if you're the good one, definitely I will respond back to you, take out my time, will respond back to your handmade note, which you're sending me after this webinar. So you have piece of paper and pen ready. So I'm starting without any further delay. See, for financial year 22-23, GSTR 9, which is annual return, and GSTR 9C is a self-certified reconciliation statement. It is need not required to be by chartered accountant or cost accountant. It is self-certified. As per section 44, read with rule 80. Now, what is the specific about this 9 and 9C? Registered person whose aggregate turnover up to 2 crore. In financial year 22-23, they are exempted from filing of GSTR 9 annual return. So if your aggregate turnover up to 2 crore, you are exempted for filing GSTR 9 annual return. Second, it is section 44 subsection 2 read with rule 80 sub rule 3. If registered person whose aggregate turnover is more than 5 crore, then only they are required to file GSTR 9C, self-certified reconciliation statement. So here the clarity is, if your aggregate turnover up to 2 crore, no GSTR 9 exempted. 2 to 5 crore, GSTR 9 annual return is required, mandatory. And if your aggregate turnover more than 5 crore, then of course GSTR 9 and GSTR 9C both would be required. So for filing 9C, first you have to file GSTR 9, then only 9C. Because 9C going to pick up the number from GSTR 9 only. So preparation of GSTR 9 is must, thereafter only GSTR 9C. The first part. So maybe the handmade note which you are preparing, you would make in point wise, number 1. This is how the point number 1, which I have discussed with all of you. Point number 2. Let me create one question for all of you, and then I will discuss. Let's say you're having 4 different registration, GST registration under same PAN number. And in each of the registration, your turnover is, in each of the registration, your turnover is, let's say 60 lakh rupees per registration. Totaling together 2.4 crore, but individually it is only 60 lakh. My question to all of you, do we require to file GSTR 9? Say yes or no in that question answer step. Quite obvious, your answer would be yes. Am I right? Yes, because aggregate turnover as defined under section 2 subsection 6 of CGST Act, sum total of taxable turnover, your exempt supplies include 3 components. An exempt supplies is being defined under section 2 subsection 47, which is nil rated or exempted by way of notification or non-taxable supplies. And non-taxable supplies is been defined under section 2 subsection 78, supply of goods or services or both which is not leviable to tax, GST, under CGST or IGST Act. So you have to include exempt supplies and your export also. So 3 component: taxable, whether intra or inter, exempt, and your export. Under same PAN number, all India, that would be your sum total of aggregate turnover. So if it is 2.4 crore, which we have discussed just while now, then for all 4 registration, we need to file GSTR 9. If it is crossing 5 crore, then 9 and 9C both together. Hope this part is clear to all of you. If it is clear, thumbs up from you so that I get a clarity that you got it. Thumbs up, which is very easy for you to say. So this is second point. Hope you are making handmade note. Hope you are making handmade note. Second point. Come to the third point now, which is important one. GSTR 9 is divided into 6 parts and there are 19 tables. And GSTR 9C divided into 5 parts and there is 16 table. An instruction to fill that the specific notification 38/2023 Central Taxes dated 4th August 2023. So this notification is giving instruction for filing 9 and 9C. What is that instruction? Point number 3. Which table is mandatory and which table is optional? So you will get all these instructions for filing 9 and 9C by this notification 38/2023 Central Taxes. Hope I'm clear. Can I see thumbs up once again for the third point? That for your any doubt, you can go back and check. So thumbs up for this point so that clarity exists for all of us together. Now come to GSTR 9 annual return. I said 6 part and 19 tables. Importantly, the first 3 tables are only introduction table. Actually start from table 4. So first of all, before I start GSTR 9, I want to give you some flavor. Whenever we are filing GSTR 9 and 9C, there are two broad components. One is the supply on which GST is to be paid, or GST not to be paid, maybe a region exempted, maybe a region zero rated without payment of tax, but that is called outward supply. Inward supply subject to RCM in your hand, reverse charge method, or maybe advances against supply of services. GST is leviable. So one is the component, one bucket is the component where GST is payable. Another component is called your inward, where purchase, input tax credit, GST input tax credit. And third is what? Your outward liability minus ITC need to be paid either through e-cash ledger or through e-credit ledger. So I'm going to discuss these two buckets in a very, detailed manner. You have to slowly note down everything so that by the time I finish my webinar today, I would be the most satisfied person. I would be the most satisfied person because of your participation, your contribution, your dedication and concentration. I need your 1 hour, dedicated 1 hour. Will I be getting 1 hour dedicated? No here and there. No talking here and there. You can take a cup of tea or coffee, just 1 hour to me. Dedicated. 1 hour to me. No one else. This 1 hour you are just giving to me as if we are dating together for 1 hour. For 1 hour. Okay, let's start. See, when we are looking at filing of GSTR 9, whether pertaining to my outward supply or input tax credit, the bucket is being divided into 2 categories. Financial year 22-23 data shown in 22-23. Financial year 22-23 data shown in 22-23. Or data of 22-23 is shown in a period April to October 23, return filed in November 23. So there's a bifurcation. So we have to get everything. So when we talk about outward supply, it starts from the invoice, tax invoice is being raised. It is self-certified reconciliation statement when I talk about 9C, an annual return. But this is the only opportunity, and I must say last opportunity, that whatever mistake we have done in the past, while filing GSTR 1 and 3B, while comparing my books of accounts, last opportunity to get it reconciled. Last opportunity. So you should not miss the opportunity. If you do all this reconciliation properly, then I'm sure you are preparing yourself for any scrutiny notices under Section 61, ASMT 10, or you are preparing for so-called notice, maybe under Section 73, non-fraud, Section 74, fraud cases. But this reconciliation would be the basis. So being client, company, tax manager, or tax professional, being chartered accountant, cost accountant, company secretary, lawyer, it is the earnest important for all of us together. So you have to prepare, you have to see the tax invoice. Look at the first classification is correct or not. There may be a possibility that classification and corresponding HSN or SSC code you have picked up may be wrong. And because of that, wrong rate being applied. Or maybe it is treated as exempted, whereas it was taxable. So this is the opportunity you can introspect, go back and cross-check everything. Any doubt? Take the professional services. Help a professional to get it done. But take the tax invoice, cross-check classification, GST rate, and corresponding HSN and SSC code quoted on the tax invoice. Look at the tax invoice recorded in the books of accounts, along with reconciliation with your eBay bill generated. eBay bill is required when threshold is more than 50,000. It is not only for supply, even for other than supply. So wherever there is movement of goods that may not be supply, GST not leviable even on delivery challan, but eBay bill is generated. So you must have reconciliation prepared with your eBay bill generated versus your tax invoice plus delivery challan or maybe bill of supply. You have to look at all these components, And if it is pertaining to e-invoicing, you have to be careful. Maybe e-invoicing applicable to you, and we must know that aggregate turnover more than 5 crore in any preceding financial year starting from 17-18, then from 1st August 2023, e-invoicing is necessary. And the threshold started from 500, 100, 50, 20, 10, and 5. You must cross-check. And sometime you will come across that you were supposed to generate e-invoice, but you didn't generate e-invoice. You were raising only normal tax invoice. What is the implication? What is the implication? For you and for your buyer will not get the credit unless it is an e-invoice. Rule 48, sub rule 4. So this is the time you must do all these reconciliation. This is the time. Then comparing your outward supply with your books of accounts, GSTR 1 and GSTR 3B. So this is the way forward we have to move. So let's look at the first important bucket where GST is payable. Table number 4 of GSTR 9. Your outward supply where GST payable is B2C, B2B, zero rated, export, SE debt, deemed export, RCM. You are a recipient and RCM is taxable in your hand. And advance you have received against supply of services. For supply of goods, no GST with effect from 15th of November 2017, only against supply of services. So GST leviable, but disclosure only to the extent you have paid GST, but invoice is not being raised. If invoice is being raised, it gets adjusted. So only such advance on which GST is being paid, but no invoice is being raised during the period 22-23. This is what table 4. And table 4 is mandatory reporting. Each of the field need to be reported separately, including credit note, debit note, and adjustment. So table 4, all the field separately need to be reported, mandatory. Am I clear? So can I see one thumbs up that yes, it is clear to all of you? Table 4, where GST is payable, mandatory reporting. Quickly, if you say thumbs up, I will get, encouraged that you are getting my pointers. Perfect, perfect. Coming to table 5, GST not payable. Not payable, that may be on your zero rated, because without payment of taxes, supply to SEZ unit or developer without payment, and there is exempted supply, nil rated, and non-GST supply, including no supply, and then credit note, debit note, and adjustment. Here, all the fields are compulsory except nil rated can be clubbed with the exempted supply. Nil rated can be clubbed with the exempted supply. And the clubbing of credit note, debit note, and adjustment is permissible. So you need not require to mention separately. It can be clubbed together, optional. So this is the 2 exception for table 5. This is what I have communicated. First you say yes, then I got question to ask you. So first you give me a thumbs up that yes, it is clear. Table 5 is clear. Give me a thumbs up so that I'm clear about. Now my question to all of you. Let's say you are dealing into petrol and diesel. Petrol and diesel are not chargeable to GST. And let's say your turnover is more than 5 crore, And the normal supply which is chargeable to GST, assumed, chargeable to GST, let's say 30 lakh rupees. Kindly tell me, do we require to file GSTR 9 and 9C? Yes or no? Yes or no? So maybe you can say in question answers tab, and you can always say that this is what your answer is coming out. You can always say that. All right. So my answer to all of you is exempt supplies include 3 components. Listen very carefully. Nil rated, exempted by way of notification, and non-taxable supply. Non-taxable supply means supply of goods or services which is not liable to tax under CGST and IGST Act. But in GSTR 9, they are using the term non-GST supply. They're not saying non-taxable. They're saying non-GST includes even no supply. So meaning thereby, they wanted us to file GSTR 9. Meaning thereby. Technically, law-wise, I have communicated what is the interpretation of the definition. But since there the column non-GST supply includes no supply, meaning thereby we have to disclose and file GSTR 9. It is the safest route. I'm not educating you today for the litigation. This is the safest route. So table 5 is mandatory except 2. You can club nil rated with exempted, and debit note, credit note, and adjustment pertaining to this table 5 with GST not payable can be clubbed together, optional. Need not require to mention separately. This is for table 5. Can I see yes in a question answers tab, or you can say thumbs up to me, so that I get a clarity that this is clear to all of you. Now, what is table 4 and table 5? Outward supply of your 22-23, including inward supply, including reverse charge, including advance against supply of services. Table 4 and table 5 will contain the data which is of 22-23 shown in 22-23. 22-23 का डेटा 22-23 में दिखाया है. Can I see thumbs up now? 22-23 data shown in 22-23. Quickly, it helps me. Once I see your thumbs up, it helps me to understand that you are getting my point. Now, corresponding tax payable and tax paid gets in table 9 of GSTR 9. So tax paid is coming from 3B, and tax payable is being calculated as per your table 4 and table 5 of current financial year, means 22-23, shown in 22-23. Table 9 shows the tax payment made. This is the part of 22-23. Now, if any debit note or any adjustment pertaining to outward supply, which is creating your incremental liability pertaining to 22-23, but shown in a period April to October 23, by return filed in November 23, to be shown in table 10. Table 10, incremental liability. It may be debit note or adjustment with your outward supply. Table 10. 22-23 shown in April to October 23. Similarly, if it is credit note or adjustment, there is decrease in liability. 22-23 shown in a period April to October 23 will shown in table 11. Table 11. And corresponding impact of this table 10 and 11 in terms of tax paid is shown in table 14 of GSTR 9. Hope I'm clear. Can I see this thumbs up? So I bifurcated the impact of table 4, 5, and 9, table 10, 11, and 14. Thank you. So many thumbs up. Thank you very much. So I'm happy that at least you all are with me. Coming to now input tax credit. Input tax credit. GST ITC. Table 6 is the important one. 6A get auto-populated from 3B, table 4A. Table 6 is mandatory reporting. Mandatory reporting. Mandatory reporting. All the fields are mandatorily need to be reported. Only benefit which you can draw. Input and input service can be clubbed and shown under input. Input and input services shown under input, and capital goods to be shown separately, because there are three, bifurcation: input, input service, and capital goods, right? So input and input service can be clubbed under input and capital goods separately. All the fields are mandatory. Table 6. Table 7 is ITC to be reversed or ineligible. So 22-23 ITC shown in 22-23 table 6, reverse and ineligible 22-23, reverse and ineligible in 22-23 table 7. Table 7. Now here, what need to be reversed? Rule 37. ITC need to be reversed by the recipient who fails to make payment within 180 days. Rule 39, ISD related. Rule 42 and 43, reversal of common credit. Section 17, subsection 5, ineligible credit. Then reversal on account of Tran 1 and Tran 2 for some region, either or region. This is what the form content. What they are saying under the instruction that you can club all the reversal into table 7H. Club in table 7H. But reversal pertaining to Tran 1 and Tran 2 to be shown separately. This is what instruction is saying. But my advice to all of you would be, and this is not written in instruction, this is my advice to you. You know, from August 22, the furnishing of 3B had changed. And in 3B now we are capturing table 4B1, table 4B2. I'm assuming that you're having fair amount of knowledge of 3B or GSTR 9 and 9C. So I'm explaining to you 4B1 of GSTR 3B talks about ITC need to be reversed or ineligible. And 4B talks about it is reversed but reclaimable. You will reclaim later. So my advice to all of you would be that for preparation of 3B, you may have captured the data separately. Rule 37, Rule 42, Rule 43, 17, subsection 5, ineligible. You have captured the data. Why you will club? You should not club it. Show it separately. The instruction is saying club it with table 7H. Don't do that. You should show separately so that your figure get reconciled and checked and verified. So 22-23 shown in 22-23 as a reverse or ineligible. Hope I'm clear. Can I see at least thumbs up for table 6 and table 7? Can I see your thumbs up for table 7? I will do many case studies, rest assured. But I'm just giving you the brief background of this, GSTR 9. Table 8 is again mandatory reporting, which is reconciliation with the GSTR 2A, mandatory. Now, having said that, now table 12 and table 13. So, any input tax credit of 22-23 need to be reversed, but it is being reversed in a period April to October 23. Then table 12 is going to be the important one. So you have to bifurcate these numbers and keep these numbers for filling GSTR 9. We're supposed to reverse some amount of ITC of 22-23, which you did not do in 22-23. But you reversed it in a period April to October 23. Then it is table 12. If something which was supposed to be availed 22-23 to be availed in 22-23, but you didn't avail. You avail in a period April to October 23. Then this is table 13 is the important one. So whatever you are availing in April to October 23, in table 13 going to be shown in table 8 C of GSTR 9, matching table 8C with table 13. To this aspect, am I clear? Can I see thumbs up once again that reference of table 12, table 13, and 13 reference to table 8C? You say, yes, I've got lot many case studies. I will do it little later. Just you go with me. Perfect. So many thumbs up. Thank you very much. Now, table 15 is demand and refund, optional. Table 16, supplies from composition dealer, deemed supply, job worker, goods sent on approval not received, optional. Table 18, which is HSN, inward supply, whatever you're procuring, inward, optional. So table 15, table 16, and table 18 is optional. It is not compulsory. Table 17 is compulsory. HSN and SSC code of your outward supply. If you are a registered person and your aggregate turnover up to 5 crore, then compulsorily 4-digit for all B2B supply. B2C optional. If your aggregate turnover more than 5 crore, compulsorily 6-digit quoting. So table 17 is important, all B2B and B2C supply. So 17 is mandatory. You have to mention HSN code and SSC code. And table 19 is the late fees payable and paid for GSTR 9. This is the content of GSTR 9. At least can I see thumbs up to this aspect? Then little 9C, then all case studies where we are having challenges today. Can I see thumbs up for this? Thumbs up for this, that this part is clear to all of you? Okay, perfect. I'm going to give you my mobile number, I promised, and hope you're making handmade note. Believe me, I've seen when you're making handmade note by yourself, it get captured to our mind. It get captured. So why I wanted you to do this activity with me, so that this get registered to your mind. And of course, you are getting privilege of sending your handmade note, which I can see would be, delight for me to see your handmade note on my mobile WhatsApp. So I am going to say that one as well. Come to GSTR 9C. Self-certified reconciliation statement. First, you will file 9, then 9C. Now for 9C, 5 part and 16 table. Table 1 to table 4 is the introductory tables. Table 5A is the important one. Mandatory reporting. Table 5A, mandatory reporting, where you are mentioning turnover from the financial statement, GST. Table 5B is your unbilling revenue opening balance. That can be clubbed with the table 5O. That can be clubbed with the table 5O. And balance, all other fields are mandatory. Mandatory. Please, table 5. This is, I have communicated to you. Table 6 is the region for non-reconciliation. Turnover as per financial statement versus turnover as per GSTR 9. Table 7, reconciliation of your taxable turnover. Table 8 is the region for non-reconciliation. Table 9, the rate-wise liability and tax payable. Table 10 is the region for non-reconciliation, and table 11, tax payable and paid. And these all are mandatory field. Table 12, 12A, 12B, 12C, which is credit of this year, shown this year, previous year, or succeeding years. Mandatory reporting. Table 12. Table 13 is the region for non-reconciliation. Table 14 was the challenge. Expense-wise ITC, ITC bifurcation. Fortunate part, it is optional. not compulsory. Table 14. Table 15 is the region for non-reconciliation. And table 16, because of difference in ITC, because of table 13A and table 15A, you will pay the liability and then any additional liability to be paid with self-certification. This is what GSTR 9C. So I'm through with the content of table in GSTR 9 and 9C. Can I start with the case studies now? Can I start with the case studies? Please tell me. If you're all ready, please tell me that yes. So start all the case study so that we can get prepared ourselves. Okay. Allow me some space. Okay. Okay. All right. All right. All right. Perfect. Perfect. I'm so thankful to each one of you. Let's start. And I'm going to ask you, and you have to answer it now. The first case study pertaining to outward supply. Whatever case study I'm discussing now, it is all pertaining to outward supply. And since I can't hear you, but telepathy, I'm watching each one of you. You're concentrating and paying attention to me. Your handmade note. You should be religious to me, huh? Don't mislead me at all. And give the answer, whatever coming to your mind. I've said everything, but now I'm checking out whether you are correctly picked up or not. Be honest to yourself because this is learning. Start. If 20, it is pertaining to all outward supply. Outward supply of 22-23 shown in 22-23. Which table of GSTR 9 is relevant? Quickly answer. Table 4 and table 9, where GST is payable. Hope I'm clear. I'm giving the answer to you so that you can cross-check. Second, outward supply of 22-23 shown in a period April to October 23. Which table would be relevant? Incremental liability, debit note, adjustment, or shown in a period April to October 23. Table 10, table 14. Hope clear? Hope clear? Okay, next. If credit note raised in 22-23, shown in 22-23, tell me. Credit note. Table 4 and corresponding impact will come through 3B in table 9. If this credit note, which is reducing my liability of 22-23, but shown in a period April to October 23. Tell me quickly. Table 11 and corresponding impact in table 14 of GSTR 9. GSTR 9. One more. Advance, let's say of 1 lakh rupees. So again, supply of services. GST leviable. To the tune of 60,000, you have raised the invoice. Only 40,000, you have not raised the invoice. Answer. Which figure need to be reported in table 4 of GSTR 9? 60,000 or 40,000? Apply your mind. This is quick, rapid fire questions. I'm just trying and doing mind-boggling with all of you. Only 40,000 need to be declared. Compulsory reporting now in table 4 of GSTR 9. Hope I'm clear to all of you, this part. If I'm clear, say the first case study of outward supply, I'm through. So thumbs up. That first part is clear to you. Second case study, and very interesting one. I will do it in a way that you will love it. And you will realize that you're answering everything. It's not me. You're answering everything. Okay. Listen now very, very carefully. Just pause and listen very carefully. Your financial statement, books, showing 100 rupees, your outward supply. 100 rupees. GSTR 1 is also showing 100 rupees. But 3B it is showing 80 rupees. 80. Now filing GSTR 9, what you will do? Start thinking. I'm giving some little 30 seconds. Books 100, GSTR 100, but 3B only 80. Just think. If you're giving a right answer, pat yourself. And you should write in your handmade note, sir, I given right answer. So that I would be knowing that you are the person who did everything right, but you should be honest. So quite obvious, your table 4 of GSTR 9 getting auto-populated from GSTR 100. Tax payable will come in table 9 of GSTR 9 on 100. But you paid only on 80, right? Meaning thereby there would be difference to the tune of 20 rupees need to be paid by you through DRC03. So table 4 will have 100 rupees. Table 9 will have impact of tax payable on 100 rupees, but paid would be coming only 80 rupees in table 9. So balance 20 need to be paid through DRC03. And now this liability is paid, which is due long time back, along with interest. And rate of interest would be calculated pro rata on the delay from due date to actual date of payment at the rate of 18% per annum. Hope I'm clear. Can I see thumbs up? Can I see thumbs up? Please, quickly, I want to see thumbs up. You may have answered yourself, but say that this part is clear to you. Okay. Okay, well done. So many thumbs up. Thank you very much. So lot of appreciation. Thank you. Second one. Listen. Book 100 rupees outward supply. One is only 80. GSTR 1, you have shown 80. 3B 100 rupees. You have paid on 100 rupees. Just think. Book 100 rupees, which is correct. 1, you have shown 80. But 3B you have paid on 100 rupees tax. Please tell me where you are going to do correction in GSTR 9. Quickly think and tell me the answer. I'm just pausing for a few seconds. Table 4 gets auto-populated from GSTR 1. It is to the tune of 80 only, but you have to make it 100. Editable. Edited table 4. And corresponding tax payable would be on 100, and which you have paid to 3B. Table 9 auto-populated will match. Hope I'm clear. Can I see thumbs up to this? Part is also again clear. Can I see thumbs up to this? Please thumbs up to this quickly so that yes, you got it. Okay, perfect. Third case study now. Third case study. Wrongly paid taxes. Let's say there was IGST liability, interstate supply, Delhi to Maharashtra. But you have wrongly shown as intrastate C plus S. And you have discharge also C plus S. How to correct it? It was actually IGST liability, interstate. but you have wrongly shown as a C plus S, charged and paid also. Correction. Table 4 is getting auto-populated from GSTR 1. Am I right? If it is IGST liability, then put it under I and reduce from C and S. Table 4. Put it under I, table 4, and reduce from C plus S. Corresponding impact of this correction would be tax payable for IGST would be created in table 9. And to the tune of C plus S, which you corrected in table 4, there would be excess C plus S paid in table 9. Am I clear to all?
We'll put that link in the chat.
Dheeraj, you have to mute yourself. Okay. So corresponding impact would be that there would be liability created for IGST in table 9. And whatever you have paid C plus S would be the excess one. So quite obvious, you need to pay IGST liability through DRC03. But the interest is leviable. My first question to all of you, please answer it. I will give you the answer, but you tell me the answer. But the interest is leviable. Fortunate part, no interest. Just pay IGST, no interest. And claim refund of excess paid C plus S. And this is within 2 years from the date you pay IGST liability. Within 2 years from the date you pay the IGST liability. Hope I'm clear. So if I'm clear, thumbs up, please. Thumbs up. Because we got lot many, case studies today. I want to have your thumbs up that you got it clear. This is going fine with all of you. Perfect. All right. Now listen. Now listen. Spillover effect. Let's say there was 20 rupees turnover of 21-22 financial year 21-22. Listen, you have to listen my word carefully. 20 rupees. You have shown this 20 rupees turnover in a period April to October 22, falling in a financial year 22-23. An actual turnover for 22-23 is only 100. But you have included this 20 rupees of previous financial year in 22-23. So your GSTR 1 is showing 120. Bifurcation of same age, 100 is relevant for 22-23. 21-22, 20 rupees is being shown in 22-23. Spillover effect. What to be done pertaining to this? What to be done? Am I right? There may be two ways we can do it. Table 4 of GSTR 9 will show 120, right? And table 9 of GSTR 9 will show liability paid on 120. You correct it, make it 100. So quite obvious there would be difference, right? Because actually it was 120, which you have reduced to 100 to make it par with your books of accounts. Reconciliation prepared, and it can be authenticated and substantiated, because I'm sure that this 20 rupees you have shown while filing 9 and 9C of 21-22 shown in a period April to October 22. This is how reconciliation in table 10 and table 14 of GSTR 9 pertaining to 21-22. This is the one way to do it. Another way. You keep as it is. Don't change. Make it 120. Pay the liability at 120 in GSTR 9, table 4 and table 9. But in 9C, you will get the opportunity, table 6. Because your book turnover would be 100. GSTR 9, it is showing 120. Region for non-reconciliation, 20 rupees pertaining to 21-22, shown in 22-23. That is how table 6 of GSTR 9C will disclose this transaction. So spillover effect can be corrected like this. Those who are filing a 9C, they can follow the second option. Those who are not filing 9C, they can follow the first option to correct it. Hope I'm clear. If I'm clear, need your thumbs up. If I'm clear, please thumbs up, so that at least I'm clear about that you all are getting it. Perfect. So I'm thanking each one of you that this much of attention I never thought, but you are giving this much of attention. I'm thankful to each one of you. Last case study of outward supply, which I have discussed, but still checking out whether you have really captured it or not. I'm just cross-checking. You receive advance against supply of services, right? GST leviable, GST paid. To the tune of 60 rupees, invoice is also being raised. Only 40 rupees is left out, on which invoice is not raised. Which table and which figure you will show in GSTR 9? Please tell me. Advance of 40 rupees on which GST is being paid, but no invoice is being raised. Table 4 and corresponding impact in table 9. This is pertaining to advance. So this is all from outward supply perspective. Now the important one, input tax credit. So are you all ready now for input tax credit? Maybe half an hour more on input tax credit. Half an hour more. Can I again get your thumbs up that you are getting it? A big thumbs up from all of you. See, I'm trying my best. I do not know to what extent, but I'm trying my best to make it very, very simple. Thank you very much. Thank you. Let's start. Though I've done it, but still I will do all the case study one by one. There are 5-6 case studies, important 5-6 case studies. Case study number 1, and you have to answer it. 22-23 input tax credit shown in 22-23. Which table would be relevant? Please tell me. Just give me the answer. Which table of GSTR 9 is relevant? Table 6. 6A gets auto-populated from 3B, and 6B you are, which is editable table, you're putting the number, right? Next. Credit of 22-23, you did not avail in 22-23. You availed in the period April to October 23 by 3B file till 30th November 23. Which table is important? Please, I'm just pausing. I'm just checking out. I've given my answer, but still I'm checking out. You just cross-check whether you're right. Table 13 and table 8C. Table 13 and table 8C. There's some credit which we need to reverse pertaining to 22-23, and I've reversed in 22-23. There was some reversal required for 22-23, reverse in 22-23. Which table would be important? Please. I hope you're giving answer. Table 7. Table 7. Okay. There's some reversal required for 22-23, but you reversed in a period April to October 23 till 3B file 30th November 23. Which table? Which table? 22-23 reversal was required. You didn't do. You are doing in April to October 23. Which table? Table 12 of GSTR 9. Hope I'm clear. If I'm clear, can I see thumbs up for the first case study that this part is very, very clear to all of you? A quick thumbs up from all of you, that yes, it is clear to all of you. All right. So good. Thank you very much. I am really getting encouraged and motivated. Believe me, encouraged. When you send thumbs up, it is really helping me to digest. Yes, you are getting it. Second is very important. Second case study is very, very important. For ITC, let me tell you the background first. Then I will do the case study. You need to satisfy the condition under section 16 subsection 2 with the time limit condition of section 16 subsection 4. We are not going to litigate here. Here we need to be tax compliant. This webinar is not giving insight for the tax litigation. This webinar is giving insight, being proactive, tax compliant. Initially, we started with the 4 conditions for recipient to satisfy for availing credit. You should have tax invoice. Recipient must have received goods or services. Your supplier must have paid taxes. You as a recipient regularly filing your return under section 39, 3B. Fifth condition they got introduced that whatever credit availed in 3B must be matched with GSTR 2B. And this condition was made effective from 1st January 2022. Meaning thereby, for financial year 22-23, you have to cross-check credit with your 2B. No choice. So you have to really go back and check whatever credit availed in 3B must be matched with GSTR 2B. Sixth condition got introduced that whatever credit coming in 2B should not be restricted. And there are 6 restrictions listed in under section 38, which is slowly government is notifying. So I will only ask you to satisfy initial 5 conditions. You should have tax invoice, receipt of goods or services, supplier must have paid taxes, you're filing regular GST return, and it is auto-populated and matched with GSTR 2B. Keeping this in mind, listen this case study and give me the answer. Listen this case study and give me the answer. Let's say you're having a credit in your books of accounts, 100 rupees. 100 rupees. Your 2B is also showing 2A and 2B is also showing 100 rupees. Book 2A, 2B match, but 3B you have availed only 80 rupees. 80. What is the way forward now? To the tune of 20 rupees you have not availed. Not availed, right? You have not availed. Are you recalling table 8A? Auto-populated from 2A, 100. Am I right? Table 8B, which is auto-populated from table 6B and 6H, which is only 80. Balance 20 rupees difference will come out in table 8D. So this ITC is available, but you have not availed. Or it is not ineligible. It is not eligible. Means it is ineligible. So correspondingly, you have to show this difference of 20 rupees in table 8E, available but not availed. If it is available and ineligible, table 8F of GSTR 9. So GSTR 9, you cannot avail this balance credit. No way. GSTR 9 only furnishing of your details. Credit, you should have availed through your 3B. If you have missed availing the credit, then it is going to be lapsed. That is what? Proactive, without any litigation, my suggestion. Second situation, book credit is 100. 2A, 2B showing only 80 rupees now. Only 80 rupees now. And you have availed credit in your 3B, 100 rupees. 100 rupees. I'm repeating again so that you get a clarity now. Book credit 100, avail 100. But 2A, 2B showing only 80 rupees. Only 80. And you have availed credit in 3B, 100 rupees. So reason could be why 2A, 2B is showing less amount, could be your supplier has made the mistake that B2B supply shown as a B2B supply shown as a B2C. It is not coming in your 2A or 2B. He has wrongly furnished the GST number of the buyer. That is the reason it is not coming in 2A or 2B. 20 rupees shortfall. The supplier could have amended his GSTR 1 at a fine time period. It was 30th November. But only the GSTR 1 of October duly amended. So any rectification of any omission or error could have been done by filing GSTR 1 of October, filed by due date of 11th of November for monthly filer, and QRMP by invoice furnishing facility on 13th of November. So that correction could have been shown in 2B of the recipient on 14th of November. Had it been done, he could have reconciled. But since this 20 rupees is not coming in your 2B as a conservative approach, of course, without litigation, proactive measure, you need to reverse. So reversal would be through table 7H and corresponding payment through DRC03 in table 9. Table 9. Of course, this credit can be paid. This reversal can be done through a credit ledger. There's nothing like compulsorily you have to pay through e-cash ledger. This can be done. So this is the second case study which I have explained to all of you. Can I see thumbs up that yes, correct? Can I see thumbs up for this, that this is clear to all of you? Please, I need your thumbs up so that, I get a clarity that this is all going fine and you're understanding it. Please, can I see thumbs up? Can I see thumbs up? Yeah, thank you very much. Okay, perfect. Thank you. Okay. Now, we have seen that sometime we avail credit under wrong bucket. Third case study, under wrong bucket. There was IGST credit, but I've wrongly availed in C and S. Actually, it was IGST credit. My supplier has raised interstate invoice, IGST charge. He has paid under IGST also, but mistake on the part of recipient, you, buyer. You have wrongly availed in C plus S. Whereas you should have availed under IGST. So what is the correction need to be done? When you have availed in C and S, which is mistake, quite obvious, your table 6 say going to be auto-populated through 3B, C and S. Am I right? My suggestion and advice to all of you. Table 6B, you should add this credit under IGST, add, and minus from C and S. Minus from C and S. Why I'm doing so? Go to table 8A. Auto-populated from 2A, 2B, 2A basically. IGST credit would be there, right? And table 8B will auto-population from table 6B and 6H where you have done the correction. Now it is IGST, which is supposed to be. So IGST auto-populated in 2A get matched with table 6B IGST. Am I right? And there will be no difference then. There will be no difference then. I hope you got it. First you tell me, yes, I need to see thumbs up from each one of you that yes, you're getting it. You got it. This is how the wrong bucket is being used. Now my question to all of you. There's a certain question which I'm having in my mind. I want to clarify that one as well. You have wrongly availed C and S. Am I right? Wrongly availed. There may be a possibility that you have utilized the same also. Just reverse the case. Reverse the case. It was actually C plus S, but you have wrongly availed under IGST. There may be this vice versa, right? You have wrongly availed under IGST. Let's assume. And there's a probability that you have utilized the same because of order of utilization. First, you have to exhaust your IGST credit. Am I right? And because of that, you have utilized the same. Whether interest is leviable because it was wrongly availed and utilized. Interest is leviable under section 50 subsection 3 of CGST Act. My answer to all of you, no interest. No interest. There's a circular number 192 dated 17 July 2023. Clearly saying if sum total of I plus C plus S is higher than the amount utilized, then no interest with a penalty leviable under section 73 or 74 because of wrongly availed. There's a recent Punjab and Haryana High Court judgment from Deepak Cells Corporation. They have relied pre-GST judgment, and there was a fact of the case is credit was only to the tune of 1.4 crore, August 17 month, but wrongly shown as a 14.05 crore. So there was excess credit of 12.65 crore availed, wrongly availed. Whether penalty can be levied, this was the issue before Honorable Punjab and Haryana High Court. I've created one video which is there on my YouTube channel. You can go back to my YouTube channel and watch this video. No interest, no penalty. If wrongly availed credit is reversed before utilization. Before utilization. But I have suggested how to correct it in GSTR 9. So this is the third case study of ITC. Am I clear? If I'm clear, please thumbs up. If I'm clear, please give your thumbs up that yes, this part is again clear to all of you. Can I quickly, I really want that each one of you should come back and give me a thumbs up. Okay. Okay. Spillover effect. Spillover effect. Like we did in outward supply, the same situation will come in input tax credit as well. Let's say there is actual credit of 100 rupees for 22-23. But there was 20 rupees credit of 21-22 shown in a period April to October 22, falling in a financial year 22-23, 20 rupees. So I have availed 120 rupees in 3B, but bifurcation is only 100 rupees for 22-23 and 20 rupees pertaining to 21-22. Am I right? What to be done? What are the options available before me? I'm going to give you three options to you. Three options. Option number one. While filing GSTR 9 table 6A would be having 120 rupees, right? Leave it as it is. Don't do any correction. Don't do any correction. But of course, with the reconciliation of preceding financial year 21-22, quite obvious, you must have shown this credit availed in table 13 and table 8C while filing 9 of 21-22. That data is available with you, and even GSTR 9 is filed like that. That will substantiate your position. So nothing to be done. Leave it. Leave it. Second, you can correct it now. Table 6A would be having 120. So only 100 rupees in table 6B, which is of current financial year 22-23. And balance 20 you can show in table 6M. And region for same is there with the GSTR 9 of your 21-22. Shown in table 8C and table 13 of GSTR 9. Another way. And third option could be, you again correct it. 120 auto-populated table 6A. 6B is only 100 rupees. 20 rupees difference will go and in shown in table 12 of GSTR 9C. 9C. When you're filing your 9C. So that is how those who are filing 9C, for them my advice, you should correct it in GSTR 9, and difference and region for same can be shown in table 12 and 13 of your GSTR 9C. So three options I given to all of you for showing spillover effect of 21-22 credit shown in 22-23. Hope I'm clear. Can I get thumbs up? Can I get thumbs up, please, for this, that this part is clear? This part is clear. Of course, we are going to have, many things for question and answers, but I'm trying to make it more simpler. And let's take the last case study for input tax credit. Last case study pertaining to RCM, reverse charge liability. Let's say there was some liability of 1920, assume 1920. And this reverse charge liability we are going to discuss with section 16 subsection 4. Section 16 subsection 4. Reverse charge liability, we know there are specified goods, specified services. For goods, notification number 4/2017. For services, 13/2017. If you have procured from registered supplier, but that is subject to RCM in the hands of recipient, then quite obvious, your supplier must have filed GSTR 1 and ticked subject to RCM, which you were supposed to pay as a recipient. Liability of 1920. Can you pay now and take credit? This is the question. Can you pay now and take credit? Two things. If you have procured from registered supplier who has raised the invoice shown in GSTR 1 ticked subject to RCM, then you should have paid the liability within the time limit for availing credit under section 16 subsection 4, because eligible document for availing credit would be the invoice raised by that registered supplier for 1920. So 1920 liability, if you are paying today from registered supplier, credit is not available. But if it is unregistered supplier and you are paying under reverse charge method, then you are having one relief, good relief for yourself. Let's say, and this with one example I will explain. Your advocate has raised invoice on 1st January 2019. 1st January 2019. You were supposed to pay under reverse charge method. By when you need to pay? You did not pay any amount to the advocate. Up till now, you have not paid any amount to your advocate. Whether reverse charge applicable, still applicable. Time of supply, 13 subsection 3 of CGST Act. Earliest of 2, date of payment, which you haven't done. Date following the end of 60 days from date of invoice. So 1st March 2019 was point of taxation, time of supply. You should have paid. So your due date for making reverse charge payment 1st March 2019. You didn't pay as on date now of that 1819 liability. 1819 liability. Can I pay now and avail credit? This is the big question, right? For anything which I've got from unregistered supplier, as a recipient, you need to raise self-invoice to yourself under section 31, subsection 3, clause F. And that would be eligible document for you to avail credit. You should raise self-invoice in today's date. Today's date, 30th November 23. Today's date of liability of 1819. Today's date. And pay the liability now. So are you going to capture this transaction for 9 and 9C of 22-23? No. You will show only in the month of November 23, GSTR 3B, creating liability in table 3 of GSTR 3B and corresponding credit in table 4A of GSTR 3B of November 23. So 23-24 would be the relevant annual return 9 and 9C for disclosure of this transaction. And this position is being endorsed in a press release, which was issued on 3rd July 2019 by the department, CBIC only. It is not my take. Self-invoice today is dated. So I'm satisfying 16 subsection 4 also. Only non-compliance I should have raised in 1819. I did not raise, penalty under section 125, maximum 50,000. So this is how from unregistered supplier RCM liability of preceding financial year, paid in current financial year, how credit can be availed and disclosure of same in 9 and 9C. Only registered supplier, your credit going to be lapsed because of time limit as per section 16, subsection 4. Hope I'm clear to all of you. Can I see your thumbs up for this? Can I see thumbs up for this? That this is again clear to all of you? Can I see thumbs up for this? Oh, great. Thank you very much. So many thumbs up from all of you. Thank you. Thank you very much. Okay. Now, one or two more clarity, and then I will sum up my presentation today. Is there any late fees for non-filing of GSTR 9 and 9C? My first question, whether there are two separate late fees for 9 and 9C. It is late fees for annual return with reconciliation, self-certified reconciliation statement. If you're a registered person and your aggregate turnover up to 5 crore, starting from 22-23, with the amendment made in section 47, 50 rupees per day is the late fees, 25 central, 25 state, subject to maximum of 0.04% of turnover in that state or UT. If your aggregate turnover up to 5 crore. If it is 5 to 20 crore, 100 rupees per day. 50 CGST, 50 HGST, subject to maximum of 0.04% of turnover of state or UT. If aggregate turnover more than 20 crore, then 200 rupees per day, 100 C, 100 S, subject to maximum of 0.5% of turnover in state or UT. This is the late fees. And table 19 of GSTR 9 would be the relevant one for late fees payable and paid. Time limit to avail credit is very, very important point, right? This is my last case study, so that we will sum up with the last case study. We know that time limit for 22-23 age earliest of due date, 30th November 23, or date of furnishing annual return, which is 31st December 23. So 30th November, right? But with one rider. If your supplier is a monthly filer, for October 23 GSTR1, he will file by 11th of November, which gets auto-populated in your 2B on 14 November. If it is QRMP, then through invoice furnishing facility, he will furnish the invoice on 13th November pertaining to October. Gets auto-populated in your 2B on 14 November. So getting auto-populated in 2B satisfying the condition. If a monthly supplier file his GSTR1 for October, let's say on 12th of November, is it going to be auto-populated for your 2B on 14 November? If it is not auto-populated, then you're not satisfying the condition that it should match with GSTR 2B. So this credit is subjective, even though till 30th November. I hope you all are getting it, till 30th November. So this is the point which you should keep to your mind. And there may be a case that wrong furnishing by your supplier, B2B shown as a B2C, wrong GST number. Supplier could have corrected his GSTR1 for the month of October. Any rectification or omission or error as per section 37 could have been done for the October GSTR1 due to be filed on 11th November, filed on 11th November. If it is not being done, then it is not getting auto-populated in 2B. Then that would be rider for you to avail credit, and which I've discussed while doing the case study. So this is what I have done throughout for filing 9 and 9C. I've explained everything in a very easiest language so that you get a clarity. I've explained that what table is relevant, what are the furnishing and case study. I do not know how many of you have prepared the handmade note. Of course, I will invite now Dheeraj from Zoho. Dheeraj from Zoho, he is going to make presentation for 5 to 10 minutes for Zoho practice. But after that, we will have question answer session. But I'm leaving my number to you and open for question answer after 10 minutes. Why I'm leaving my number with all of you? At least you fair opportunity of doing hard work today. And you should not say that Bimal ji, aapne apna number nahi diya. So take down my number and send your handmade note and with constructive suggestion. And hope you must have liked today's webinar with no PPT, but you have understood it. So my number, mobile number 98-106-04563. So thanks for joining today, and handing over to Dheeraj from Zoho for a session hand-holding to all of you for Zoho practice. So Hers, now you can take it forward.
Thank you so much, Bimalji, first of all, for a interactive session that you always do. And I am an IPCC clear student. I soon believe that I'll be half chartered accountant with the knowledge that he is imparting already to me. Now my CA will have to answer so many questions. But moving ahead, I would like to introduce Dheeraj. He is a business development manager with us who will be running you through with a short overview of Zoho practice. And he is with Zoho for 8 years now. So he is deep in line with the Zoho products. Over to you, Dheeraj.
Thank you so much, Harsh, and thank you so much, Bimal ji. It is my pleasure to be hosting a webinar with CA Bimal Jain ji. Again, everyone, my name is Dheeraj, like Harsh mentioned. With the limited time that we've got, I'll quickly walk you through some of the salient or some of the unique features or functionalities that we kind of have in Zoho Practice as a product. So let me quickly share my screen. And while doing so, I would tell you, so this product, right? So Zoho Practice as a product, we launched it last week. So it's been only a short while since we launched this application. And this is specifically for CAs and accountants. So this is an application that we built uniquely for this community to enhance the experience that they have while working with their customers on Zoho Finance applications, right? So I would concentrate on three main pillars, right? Three main pillars of Zoho Practice as a product that I'd like to share with you. First, of course, is the collaboration aspects that we were able to bring in to Zoho Practice as an application. So just to give you an example, Zoho Practice currently integrates with three of the Zoho Finance applications. So Zoho Books, accounting, Zoho Payroll, which is the payroll processing software of Zoho, again, ties into Zoho Books. And then we have Zoho Expense, which is our travel and expense reporting software. Now, all three applications under the Zoho Finance ecosystem can now connect to Zoho Practice, and you can seamlessly manage the operations of your clients on these applications on Zoho Practice, provided it's connected. Now, let's talk about collaboration, right? So I get to map, assuming this is my accountancy firm and I've mapped all these customers to Zoho Practice account, and all of these clients are on Zoho Books. I get to collaborate with the customer end to end through this application, Zoho Practice. Now, there are multiple ways in which I can do that. There is an inbuilt integration with Zoho Click, which is our team communication software. And as you can see, I've created a Click group and I have participants. Two of these are my own firm users. So assuming I'm the owner of the firm, I'm there. One of my employees there. And as you can see, this is a client user. So the client is also part of the discussion. Now, anything I post here would automatically reflect in the client organization as well. Now, let me take you there quickly. So Lab 67 is the name of the company for the client. And let me switch to the organization here. You can see this is the Zoho Books organization of the client. And as and when an accountant maps a client's Zoho Books account to Zoho Practice, which is a practice management tool, a new tab by the name My Accountant appears in Zoho Books. So this is where all the communications happen. Now, this is the same chat that we were looking at in Zoho Practice. So here's the communication. All unofficial communications can actually happen. Timely responses can be generated both from the accounting firm as well as from the client's firm for any issues or any questions or queries, right? So more of a casual engagement. But not just that, there's also an option for accounting firm to initiate a client request then and there. So here you have this option called client request. It's also available on the left-hand side by the name client request. So I can create new client requests for the clients. Let's now, for the sake of time, go to one of the existing client requests for this particular customer. You can see bank reconciliation, which is a client request I've created. There are questionnaires. So these are all unmatched bank statements for which I would need clarity from the customer. in order for me to match them as an accountant, right? So I've raised those as questionnaires to the customer, and it appears in their Zoho Books organization, as you can see. So here, let me go to Zoho Books. Here's the bank reconciliation that we were looking at. And you can see that the exact questionnaires that we were seeing in Zoho Practice is appearing for the customer as well. And not just this, there's always proper notifications notifying the client users that there is a questionnaire that is raised by the accountant, and they can add replies or post their comments on what these are actually for, helping the accountant uh, match the bank transactions seamlessly. So that's one way. And not just that, comments can be exchanged, files can be interchanged with the exchange between the customer and the accounting firm through the Zoho Practice application. Now, what it does is, let me give you a real world example. Whatever communications that you're currently having with your customers through WhatsApp or email, it's all not centralized, and it's not within your control as well. It's not available at your fingertips at any point, right? You will have to backtrack. You will have to do a lot of compilation to kind of get all of these at your fingertips and go through the previous histories of conversations you've had. Now, with Zoho Practice, I can assure you that you will have all of these in a more structured manner, and all the communication, be it your employees as well as your client employees communicating, all happen through the system itself and not via outside mediums. So that's the advantage you get. And not just this, you can, in Zoho Practice, you have an option to also track the emails and the responses that you get from the customers. So here are all the emails that I've sent to the customer. I can view the content, and also I can choose to view the responses that the client has provided to the emails that I've sent. So that's first major thing related to Zoho Practice. Second is how we were able to embed artificial intelligence to Zoho Practice to make the life easier of CAs and accountants. Now, that's why we have this tab called Insights. So it's more of a deep dive into each of the client's current financial data. And this dashboard is available at an individual client level. So I'm selecting this particular customer. The system would automatically detect any anomalies that are available in the client's books and would notify the accountant, would notify any pending reviews that are to be done, any pending filings to make sure that the deadlines are met. Here are all the anomalies in the client account. So as an accountant, I can mark those as verified if those are intentional entries. If they are not intentional, then I can go back to my client's account and make changes so that these anomalies are taken out of the client's books. And not just that, it also provides a detailed breakthrough of all the uncategorized transactions or bank feed entries, unreconciled bank statements, all of these, and dormant accounts. So we keep the criteria as 90 days. So regularly transactions were getting posted in this entry, in this particular account on your chart of account, but for the last 90 days, there has been no transaction. So that is something to be looked at as well. So all of these are provided as insights at the fingertips of the accountant with a click of a button, provided the Zoho Books organization of the client is linked to Zoho Practice. Now, third and most important thing, this is probably something that you've already been wondering, where is the option for you to manage the day-to-day operations or tasks, right? And that is why we have a dedicated task module available in Zoho Practice. So you can create one-off tasks or you can create recurring tasks as well. So just like for the folks who are familiar with Zoho Books, you're probably aware of how recurring invoices or recurring bills or recurring expenses work, right? So you simply define a criteria, a date range on which this task needs to be repeated, and choose the frequency. Automatically, the task gets created in the system. That's exactly how recurring tasks as well works. So you can have your monthly task, quarterly task, yearly task, all of that configured so that at the concerned time, the system would take the responsibility of creating those tasks and assigning it to the respective employees. And not just this, we also allow Zoho Practice users to set up task templates. So just to kind of give you a real world example. So every time you're onboarding a new customer to your firm, there are a set of activities that needs to be performed, right? And need to be undertaken before you start working on the customer. So those, I've put that as a client onboarding checklist. So every time an accountant keys in a user, a new client in Zoho Practice, he can just go ahead and create a new task and select from this template so that the respective users or the task owners of these particular tasks get assigned those particular activities, and then they can perform these on time. So these are the three main key pillars of Zoho Practice. Not just that, we have also handled something that has been a long pending request from our accounting community. We have handled the accounting firm login. So as you can see, this is the Zoho Practice users that I have in my Zoho Practice account. Now, these users can have access to the client's Zoho Books or Zoho Payroll or Zoho Expense organizations without actually consuming the user access of the customers. So here you can see I've added all three users to the client's organization. Now, this would not consume the number of user licenses that the client is allowed in the subscription of their Zoho Books organization. So we call it Zoho for the firm login functionality, and that's completely available in Zoho Practice. We provide detailed activity logs for all the activities taking place in Zoho Practice, and also central repository of all the documents being exchanged or collected from customers. So whatever is being exchanged with the document sharing functionality that I just showed you, those documents are also being tracked in this centralized document folder. And from here, you can further group them into respective subfolders as well as per your requirement. Now, that's a bit of an overview of the product. To kind of wrap up, you get a unified dashboard of all the clients that you manage, not just the accounting software, but you can also link payroll and expense reporting application of Zoho to Zoho Practice so that you get a unified overview of the client's financial statements. Now, the obvious next question would be, what's the price of this software? So like I said, this application, we have built it specifically for our CAs and accounting community. So this is currently offered for free. So all of you can sign up for Zoho Practice and start using it for your clients completely free. I'll post some links in the chat section once I'm done with the presentation where you can start using Zoho Practice, or the URL is pretty simple and straightforward. It's practice.zoho.com. So please go ahead, sign up. It's completely free for 5 users of your firm. Additional users, it comes with a small fee as well. And it's super intuitive and user-friendly when it comes to the usage aspect. There are a lot of resources available. And for those of you who find Zoho Practice interesting, we also have a rewarding partner program that helps you manage your clients on Zoho platform, Zoho's finance application, and take advantage of some of the benefits. So please, we will be sharing all of these links with you as we conclude the session. So with this, I kind of hand over things to Harsh back again. So take it from here.
Thanks for the lovely presentation, Dheeraj. As we all are aware that you do a great presentation and it was a great overview of the product. But with this, Bimal sir, again over to you for your question and answers, as we always do. Whenever you're ready, shall I start?
We can start now. We can start with the top, like Harsh Agrawal, then followed by other guy. On top, where you have written chat box.
Correct. So the first question is by Mohan. Guruji, kindly let me know if ITC 21-22 reported in 23-24 and 22-23 ITC claimed in 23-24 year. While preparing GSTR 9, Table 6B 22-23 claimed net ITC and 21-22 ITC difference will arise in Table 6J. This will be reported in Table 6M. Any other ITC are well but not specified above. Will this be correct?
See, I given the detailed scenarios, 3 scenarios I've discussed, Mr. Mohan, that spillover effect. Since you posted your question before I have explained the transaction, so sure, with later part of my presentation for showing spillover transaction, I've clarified what would be the best option which you can choose, Mr. Mohan.
We got a thumbs up from him as well. So whether CN and DN date would be 22-23 or from April to October 23, issued in respect of FY 22-23 supply by Rashmi ji.
Rasmi ji, whether credit note, debit note, date would be 22-23. See, date would be whenever you are raising such credit note and debit note. If date is pertaining to 22-23 but raised in 22-23, then it's a part of table 4. And corresponding impact will go in table 9 of GSTR 9. But any credit note, debit note pertaining to 22-23 but dated in April and October 23, then that would be having impact in table 10, 11 and table 14 of GSTR 9. Rasmi ji, hope I'm clear to this.
Yes, sir. By Anshul. So, where to show tax liability and sales adjustments of FY 21-22 made in FY 22-23.
Again, Anshul, might be you have raised this question before. I have explained the transaction and which I have clarified in my presentation. Where to show tax liability and sales adjustment of financial year 21-22 made in financial year 22-23. I've explained very clearly and given the options also.
By Manisha ji. What about the income we forget to show in FY 22-23? We have shown in FY 23-24 till November 23. Which table 10 right?
Table 10, Manisha. Till November 23 means till the GSTR 1 file for the month of October 23 by 11th of November. So that anything which credit supposed to be availed by the recipient, that is how. But April to October period to be shown by return file in November 23. I mean, Manisha, I'm okay with that. And table 10 is the right proposition for any debit note and adjustment.
All right, sir. Which amount shown in GSTR 9 table 10 and 11, GSTR 1 amount or GSTRB amount?
GSTR 1 amount rather. See, try to understand we are creating liability and paying through table 14. So that is how, Narendra, Mr. Narendra.
We have a question by Abhinav. So, credit note of FY 22-23 shown in financial year in FY 22-23 only, but shown in GSTR 1 in FY 23-24 till September, and credit note of FY 22-23 shown in financials in FY 23-24, but shown in GSTR 1 in FY 23-24 till September. Is the treatment same in GSTR 9 of FY 22-23?
Mr. Abhinav, very clear. Whatever disclosure in your GSTR 1, that gets auto-populated. And to that extent, you need to correct it in GSTR 9 and 9C. If any credit note of 22-23, you have shown in your financial for 22-23, but GSTR 1 you are showing in 23-24 till September. So ultimately, you are capturing in the period April to October 23. So to that extent, table 11 will come into the picture. And corresponding impact in table 14.
All right, sir. By Ravish. Input that is reclaimed will be reported twice in all other ITC forming part of table 6B and H of GSTR 9. Accordingly, there will be a difference in table 8C. How to avoid the difference and record the reclaimed ITC?
It will not be. Whenever you are whatever reclaimed ITC you are referring to, it was initially reversed as per table 4B2 and then reclaimed in table 4A5 with the disclosure in table 4D1 of GSTR 3B. So how come it would be twice? I'm not understanding. Please get this number checked and verified. Mr. Ravis.
Question by TTIA organization mostly. Sir, in table 6A, auto-populated amount includes temporary reversal amount also. But in table 6B, C, D, E, the temporary reversal amount will not come. Then where to show this difference?
So this difference may be table 6M can be picked up, but you should prepare the reconciliation accordingly.
Right. Question by Deepak. Sir, GSTR 9 table 6 REC, I'm not sure what it is with GSTR. All right, reconciliation is with GSTR 2A. But in some of my return input in 2 and 2B is different.
Table 6 is not reconciliation with 2A, it is for 3B. 2A reconciliation comes in table 8. Deepak, next.
All right, by Rajesh. Does reversal of 22-23 done in 2024 is required to be shown in negative in table 8C?
It can be, it all depends that how its impact is coming out. Can be shown in table 8C accordingly if there is negativity. There is negative impact, sorry.
Ashutosh, sir, should the reconciliation of input tax credit ITC be done from GSTR 2B or GSTR 2A for the FY 22-23?
You have to do from both the statement, but 2B is the sacrosanct for availing credit. Mr. Ashutosh.
One more question by Ashutosh. Should I reconcile the input tax credit GSTR 2B on a monthly basis or reconcile it in GSTR 9 under table 8? The reason being there is a difference between monthly GSTR 2B and the ITC in Excel under table B in GSTR 9.
It should be on yearly basis for the period we are talking about. Monthly, you may have variance for number of region. So monthly is not important. Cumulative numbers going to play the important role.
Right? Mostly our last question by Harsh Vakil. Sir, I have a query. ITC for FY 20-23 of a party is showing in 2A by 2B. GSTR 3B also filed for the month in which purchase is made. However, its GSTN is cancelled suo motu with effective date from 29/11/21. And now credit is not shown in table 8A annually for filing GSTR 9. No revocation file. What to do?
Mr. Harsh, this is a litigative item and we can debate through, filing a reply against the so-called notice. If GSTN cancelled off your supplier suo motu with retrospective date, there are so many other, defending point, which we have discussed in number of videos, which is uploaded on YouTube, my YouTube channel. You can go and watch the same. But definitely, if it is not coming in 2A and it is eligible to you, you should avail and let difference be there. Keep the reconciliation prepared and substantiation for tomorrow's litigation and defending your case.
All right. So last question for the day, as Sir has been speaking for almost 2 hours now. I understand his passion, but still we need to give him some rest. So, Sir, input reclaim as stock received in next month during 22-23 now in 6B table. It become double. Maybe we entered it 6H, but it would mismatch with table 8A. And there will difference will shown WTS remedies.
First, I'm not clear on what count. Reclaim means you must have reversed earlier. So mathematically, which is reversed and reclaim, so it is one time. How come it is doubling? I'm little doubtful about it first. So not able to throw clear light on same, but any reclaimed credit is initially reversed somewhere. So ultimate cumulative effect would be one time only. So kindly cross-check. Here's my submission to you.
No worries, sir. So attendees, as we have all received Sir's number and this webinar will be uploaded live as well. So whatever question you have, it will be answered with the recurring webinar that we run for this particular video. With this, I would like to extend a warm, heartfelt thanks to Bimal sir. Yes, sir, please.
Just, I want to compliment all the participants who are taking out your important time and joining today for this important webinar. Yes, without PPT, I have done deliberation, but I'm sure you must have experienced and you must have got the best insight of discussion on GSTR 9 and 9C. So thanking each one of you from core of my heart for your such a love and affections, and keep continuing for this GST walk the talk and to make GST good and simple tax. Thanking once again, take care of yourself and God bless all of us together. Hers to your team and Zoho team as a whole, thanking for doing such a wonderful webinar series, for handholding to the tax professional, taxpayer, even to the tax department officials. And we are trying our best that we can make this GST good and simple tax. Handing over to you first.
Thanks a lot, Bimal sir. It feels really good. And as I said, Bimal sir is always there with his utmost passion to help and deliver our GST with aplomb and with much passion as again. So with this, I will request and I'll request everyone to give us permission to take this off, and we'll be back with another webinar next month onwards. Thank you, everyone, and thank you, Bimal sir, once again.
Thank you. Thank you very much.
Thank you.